Well, Warriors, very important day today. It's critical.
It's bin
But
day
you,
today.
what's that, buddy?
It's bin day today. Rubbish day
Yeah.
today.
Yeah, I mean, I used to say today's critical. Every day is critical when you're
Uh,
risking money, isn't it?
yeah, if I forget to put the bins out, the wife will never go at me.
All right. So, how's everyone doing? Alexander, Hugo, Richard, John, how you doing? Brock, Steve. Steve's here today. Hello, Michael. Scott, how are you? Laura. All right. So, going into the Fed, a couple of things that seem pretty important to me is, what's happening. Oil's finally rolling over. Okay. So, failing rally potential here. The off number was 84.15 for this Friday. Last Friday, we didn't get a 2 week reversal. This week, it's a pretty ugly candle. We're under the close from 2 weeks ago. And, I'm just short term bearish, thinking that there could be a flush. I also think that there could be a nice correction. I rarely do this in front of the Fed, but I'm short S&Ps from last night and willing to sell a rip and against 46.55. I'm not saying this is the top, but we're diverging up here. Kind of looks like here you go, Blake, 1, 2, 3 on the 4 hour. Maybe it looks a little better. Anyway, I think 45.25 is possible. It's not big. And then, why not even down towards 44.50 and then make another assault in December. There is a seasonal thing in November where they say, the Bears feast on Thanksgiving. I know we're still about 3 weeks away, but why not a 2 week pullback and then blast into Christmas? So, I think that's a possibility. And also, EG's turning again. So that may have been it. So now the guys, looks like a short. I know, when you're long something or short something and it's a struggle for it to, make progress, it's kind of will tell you. Sometimes you have to be, and I bet the team would agree with me that sometimes you have to be the wrong way to know to be the right way. And you could tell how it feels when it's moving against you. It has momentum, and then when it's moving in your favor, it's really struggling. Ryan, I mean, sometimes don't and sometimes you have to be the wrong way to know to get the right way.
Yeah, yeah,
You know
exactly.
what I mean? So,
Yeah, you
you
need
really
that
get the,
confirmation, don't you? You need to be told
yeah,
that's what's happening. Yeah,
yeah, when it's you're long and it's upticking, it's a struggle and it gives it back quick. That's a pretty good sign. And yesterday I was watching every rally in crude, and I mean, here's a bar that really can tell you something. It was this, okay? So we rallied all the way back here to the 84 level, and then look at this candle,
what
and the
up? Yeah,
selling just became persistent after that because I watched every pop, and it didn't take much selling to take it down to a new low. And I'm not saying we can't rally from here, but I'd sell a rip um, after OPEC tomorrow if there is one. Yen, you know, are we going to make a trip down towards the breakout before it goes? It's possible. The yen will range, and put you to sleep, and then you'll have a move. But I would also use, if it happens, any weakness in the dollar, I would fade it. I, look to short the euro, maybe up here, because I think we're going to go to Blake's target. And coincidentally, I had this line, great minds, and there's a lot of confluence at 113. That'd probably be 96 Dixie. So in the coming weeks, I think we have one of the best shorting opportunities in the dollar in quite a long time. So, and they'll probably be 96. So I'm thinking 113. Blake's been talking about it for a while. He's stayed bearish, has capitalized on dollar strength with his basic technical, nothing fancy, just, he really knows the fundamentals of technical trading. Okay, there are fundamentals even in technical trading, so that's where I think we're going. And what I'd like to see is the possibility. What would really tell me would be for euro to make new lows, take out these lows, and perhaps euro pound doesn't. Maybe euro pound pulls back to here while euro's making a new low, but euro pound isn't. I've seen it give me tells. It was in a bear trend well before the euro started selling off. So it's a leader and it looks ugly. And just wondering what you guys are thinking here. Silver took it on the chin yesterday, but it's holding. I'm still thinking something like this. If we could take out these lows, that we could get a right shoulder. And Stelios, who's been very patient, saying that 22 or in the 22s is possible. I think we'll know today. If we take out yesterday's or today's lows, it's going to look pretty vulnerable under the 50-day average, right? So, anyway, what I think we have setting up here into November is an important high in the dollar and potentially an important low in the metals that could be a trade that could last for months. So, what do you think, Stel? Ryan, Steve?
Good morning.
Hey, good morning, buddy.
Hey, happy Fed Day. I think you're right. It's a big event today, and I think it's going to be market moving either way. I know it's famous last words, but we are expecting 15 billion of tapering, 10 plus five MBSs, and but the market is kind of expecting a little bit more. I think the more more and more I read and I interact with people, like the view is like, oh yeah, they might be on the hawkish side. I'm on the other side. I think that they're getting more and more reasons with every day to take it slowly. And we've seen copper and aluminum or aluminum, as you say, natural gas. They're all off the highs between 10 and 20%. We've seen inflation. Yes, it's high, but it's last couple of weeks, it's not accelerating like it was before. PMIs are turning. The central banks know that if they start tightening monetary conditions, they're going to be suffocating basically the economy or any growth we're getting. And also, and let's not forget COVID. It's still here. Cases are rising pretty much everywhere. Here in Greece, they're going to take new precautions now. They're going to probably lock us in. I don't know what they're going to do. And so the central banks, they do have a lot of excuses to not go so quickly. I personally think the Fed's going to be on the dovish side today. I wouldn't be surprised if they go 5 plus 5 billion, or if they say, look, we're going to taper, but the pace might not be, middle of 2022. They might leave it a little bit open-ended. So I think that's what I think is going to happen. But obviously, I can be wrong. I've been wrong many times in the past. And if I am wrong, and if the Fed is on the hawkish side, then I think your comments on silver are spot on, Dale. I think we're going to get towards 22s, maybe even lower. We know that silver is the first one to get slammed, absolutely slammed. And I doubt it's going to be different. And if you look at how silver has underperformed gold, and how gold and silver have underperformed pretty much every other commodity, they're still the weak sisters.
Well, Blake asked me why, I haven't been showing a lot of 3 drives. And, if we don't put in a right shoulder, this is the other scenario for silver, would be some type of 3 drive to a bottom formation off the previous 2 lows that would come in a shade under 21. And that'd be a pretty classic formation if it did it. So that's what I see, two options, either high or low for a right shoulder, or one more washout down there still.
Yeah, I agree. And the way I'm trading it, people who followed me, they know how I trade. I'm not a day trader. Last time I took a long on silver, I've said this many times, but I'll say it again. 2018, and it took 18 months, mid 2018, I think, to end. 18 months of nothing. And then COVID came, everything got smashed. I was down something like 15% on the position. But I'm unleveraged. I take it slow and I accumulate. And then after COVID, I got out a few weeks ago, later, or maybe a month and a half later at plus 50%. So if you annualize that, that's not a bad return. So I'm doing the same now. I'm accumulating. I still have just under half the position I want to have, just in case we get that flush down towards 2021, 22, wherever. And I'm going to be definitely looking to add. Now, if we do break out on the high side, I'm going to add on the high side. I don't care where I add. Well, actually, I do care. I want to add lower, but that's the way I trade it, and many people can't trade like this. They want to have the quick trade. You leverage up, you get the quick profits out next trade. That's not me, but that's the way I'm playing it.
Okay, and this is going to be important when this is going on. Silver's underperforming, and I see like a little bit of a head and shoulders pattern here. Maybe we get up here. You want it to stop there. And, I was in the business when the mean on it for many years was 40 to 1. So, 40 is a possibility. When you look at this rally that we had off of this massive historical decline, I don't think we'll ever see this again. Maybe I shouldn't say ever. But all we did was rally 23%, not even 38% back. So
Yep.
pretty weak rally. Why can't it take out the low? And silver will lead. But I think there might be a few days left where, it's the relative weakness against gold.
Yeah, and our friend Sab is asking if I'm right about the 5+5 taper. Where does the SPX end the week? 4,700. I think higher than that, probably, most likely. Everything's going to get bid if they are dovish.
Yeah, so, a lot of people raising targets 4,900, 5,000. I'm thinking.
We got to 36,000 in the Dow after how many years after the book was written? So why not higher?
I enjoy the fact that we've readjusted the definition of hawkish and dovish. Nowadays, hawkish is being super dovish, and dovish is being ultra dovish.
Yeah. You decrease the amount of actually adding more liquidity to the system, and printing more
and
money.
That makes you hawkish.
Yeah. I know.
Well, good morning, guys. Maybe we should go to Ryan's post, and I have to agree with what Ryan said. I don't think today's going to be too big of a deal, because I don't think that the Fed is really going to veer away too far from expectations. They've been really good about telegraphing exactly what they're going to do and then doing it. I mean, if the market's sitting here assuming that the Fed's going to taper, let's just call it 15 billion a month, and we're going to wind it down within 7 months or 6 months or whatever the time frame is, then why should the market really be affected a whole lot? Or let me restate that. Why is there going to be any downside in the equity markets, and why can't the markets just stay supported and will be status quo? S&P continues above 4,600 on its way to 47. I'm looking at 47 25, I think is
that a Fib extension play?
It's here. I'll show you. It's the 161% extension of the move. We've completed the inverted head and shoulder pattern, right? Like literally to a pip from the breakout point is right here.
The invalid one.
The what?
Invalid continuation head and shoulders formation.
Yeah, it's I don't like to play them this way. I like to play counter trend to this, but you could also say, well, maybe the neckline was actually here, and we got a little further to go. But however you want to view it, I think this is the minimum expectation is we've reached it. But if the Fed stays status quo, and like I said, they just come in in line with expectations. And remember, if you guys are expecting a Greenspan type of Fed, we're not getting that. I can't remember the last time we've had, you know, a really outsized, you know,
Blake, we got ADP, by the way.
Oh, thank you. Yeah,
quite a big.
it's a good number.
571 versus 375.
All right. Well, that's, you know, that's a good number. And, you know, the Fed's taking in account everything, right? That's coming out, whether it's the job. Thank you, Steve and guys, for mentioning that. I knew that the jobs were coming out today because Ryan actually reminded us in the chat room that we do have ADP today. And I'm like, oh yeah, you know, with the Fed, you tend to forget that it's like, oh, we do have some, you know, important data coming out. But here's the dollar yen. Surprised the dollar yen didn't really react from that at all. You know, just, but again, you got jobs report on the mind of everybody. Euro's just kind of steady. Really quick, I just want to get your opinions on the Fed. I know Stel, we got yours. Ryan, are you here? Or are you listening?
Yeah, I'm here.
In?
No,
hey, so
yeah,
great post on the Fed and what they're expected. And guys, if you haven't read it, you know, you could go to Forex Flow Live, where you can see the news stream that Ryan has here, and he's got his FOMC preview there, or you're following him on Twitter, or, you know, ForexAnalytix as well. But what are your thoughts? I know your thoughts are here, but do you want to expand on what you wrote earlier today?
Yeah, I think, you know, we all want a big event. We all want something juicy, moves markets. Sure. You know, I'm afraid to say, you know, we want that every meeting, and the Fed always deliver a low volatility as much as possible. But, you know, we do have scope for some moves here, because we want to know how they view about the future, what they think about the economy. Are we going to start to see it, you know, falling, dipping a bit because of all these supply issues? So they've got the taper's done. Okay, that's the first thing. It's done. We know the taper's coming. Doesn't matter whether it's this month, next month, 6 months duration, 9 months, 8 months, whatever. It's coming. Yeah. It's how they progress the future. Now, what I'm worried about is that they give it a big old can kick into, you know, Q1, Q2. Here's a taper. Now we're going to sit and watch the data for the next 6 months before we even think about making our next move.
Can I just throw this in before I forget it? You know, yesterday Joe Biden's at this climate conference, right? And all of a sudden he announces that there's going to be lots of Fed nominations coming in the next few days. What a weird place for him to be talking about the Fed.
No, well, that might have been a weird thing, but, you know, also what that tells me is it's not a slam dunk that Powell's going to be in the right, and that to me should scare everybody. Yeah, that was like a cryptic way, and he didn't mention Powell as far as renominating him. So, you know, if you guys really want to, and I'm sorry, Ryan, I'm gonna let you. I want to let you. And I'm sorry, Ryan. Dale makes a great point.
No, you go. No, carry on.
You know, if Powell is not the Fed chair, that will be a disruption in the market that the market's not really thinking about. I would venture to guess that there is 70% of the market expects Powell to remain as Fed chair. And so anything other than that, whether it's, you know, what's her name from Brainerd, or, you know, Brainerd would be, you know, probably the least disruptive of any new Fed chair. But, you know, there are other people out there, and Ivanka Trump. She could definitely rock the boat. I'm joking. Okay. But anyway, Ryan, go ahead, continue your thoughts, because I really want to show people some key levels of where the markets, you know, where we should be looking ahead of the FOMC. So go ahead, continue.
Yeah. So I was just saying, you know, I can see the Fed taking the low volatility route and, you know, doshing out the taper, kicking everything to next year about what they do next, throwing out the warnings, you know, if inflation carries on up or if it falls back. So for today, yeah, we're looking for those key messages, and we could move markets, but I'm fearful that we're going to get the volatility sucked out of it. But, you know, if that's what we have to deal with, then we have to adjust to that trading wise. And my biggest advice today would be, you know, we've talked the Fed till we're blue in the face, what they may or may not do. get on your charts, pick your levels. If we're going to get big moves, know the wider levels. If we're not going to get big moves, if we're not going to see anything that breaks the range, know where these ranges are, know where your levels are, where a price might pull up or have some trouble. And that's where you get into, and that's how you trade it. And you assess the news, you have your armory of chart levels, know where you want to trade. And that's how we go about it. And if they do suck the volatility out of it for the next 6 months, fine. Then we sit here trading tight ranges like we have been for the last 6 months, and we make our money.
And that's what Richard said. Ryan's biggest lesson: just trade the levels. My the trader, the highest productivity trader in the Gelos office that I traded with for years, all he cared about are the levels. He's like, "Hey Blake, what's that level you're looking at? Hey Blake, what's the level in the euro you're looking at today?" And that's all. That's the only thing he cared about. It's not. He's like, I remember, well, like several years ago, we were at a holiday party, and he's like, "I really don't know what the hell is going to happen," because we were like drunk, we were like, it was a holiday party, and he's like, I really don't know what's going to happen ever. I just know where the levels are at. I just trade around them. And I'm like, and it's so funny because we were like totally just two drunkards sitting there like talking about it. But the fact of the matter is what exactly what Ryan's saying is, just know where those levels are. I'm looking at the dollar index. Look, we know there's like two major levels above us. We have a bull flag pattern breakout point, which is at 94.22. And then 94.70 is the big, previous support spike high over here in September, big resistance. We have two big levels that we need to be paying attention to. If you're like, oh shoot, I want to be a dollar bull. Well, yeah, but in order to be a dollar bull, you have to be breaking above 94.20. Let's just call it 94.30 and then 94.70, period, end of story. So if you know where those levels are, great. And if you're a dollar bull and you're like, I want to buy it on dips, great. Then buy it down here at 93.50 because that's a big breakout point and that's the flag bottom. And if you're a dollar bear, well, wait till it breaks below 93.25, and then that you're free and clear, or short it, where we're currently at. So know these levels because they are critical to what the market's looking at. We have a bull flag pattern, very shallow retracements in the dollar index. Period. You're dealing with a dollar that's pretty damn bullish.
And have patience. Have patience on those levels. Don't try and chase it. Just
wait
because you think it's going to get a move and you're going to miss out. Sit and wait. Take your time. Let the levels come to you.
Right. So now, look at the S&P. Look, we're bullish, and while we're above 45.50, it remains bullish. And I'll tell you right now, my whole strategy of everything that I'm doing would shift dramatically if we broke below 45.50 in the S&P. But that's a big if, and that's no guarantee. But if we broke, did I say but? I did. If we broke below 45.50 in the S&P, the way I approach the market will be 100% different than what way it is right now. Period. Right? Because that would be, false breakout. A lot of people were chasing the market higher. We're getting a reversal right where we should. But until that happens, then we have 4,600 as big support intraday for the week, then 45.50. And
wait for your ideas to confirm is the message.
Yeah. I mean, we're stretched and I also have to mention this. The market is extremely complacent right now. And that's the downside. That I think that's the bigger risk of the market, is the market has expectations. Our expectations is the Fed is going to taper 15 billion a month, or whatever the number is that the market is expecting. The market has expectations. You know what? The market had expectations on what the RBA was going to do this week, and the currency did the exact opposite. And so when you have a complacent market that has certain expectations, I think that's the bigger risk. But that doesn't mean you should be like, oh, look, the Fed met expectations, so I'm just going to go ahead and short stocks because expectations were met and the market's so complacent that I'm just going to get short. That shouldn't be the way you approach it at all. Is you just watch the key levels and start to be very nervous when the market is in extreme complacency. I do want to point out, because you guys were talking about silver and you guys were talking about precious metals. I was listening to this podcast last night. I was in the chat room. This is our, by the way, this is the ForexAnalytix chat room. If you guys want to see, how active it is. That's from, I got up about an hour ago I got into the chat room about an hour ago. And that's where I said happy FOMC day right there. I mean, this is on where half of our traders right now won't even be here until FOMC time. Not very many people here, but and then there's the Forex Flow live chat room that, Ryan and his crew have come over on, news and research, all of our trades. But I want to show you in the general chat, last night, because I couldn't make it. I was out walking around. This is a park that I was out walking around at last night that I'm at a lot. And I listen to podcasts when I'm, walking like 4 or 5 miles out there.
The dogs?
No. It's
Yourself?
just myself. Yeah. But I was listening to this podcast last night about NFTs and, and the metaverse and all this other crap. And I'm like,
did your head explode?
It almost did. Yeah, it almost did. But the fact is what I'm come to the conclusion is, their money's being thrown at anything and everything that everybody wants the next Bitcoin or Ethereum or, crypto craze. So they're putting money into whatever, into the metaverse, and which may or may not be a thing. I still believe we eat, sleep, and poop in the real world. So, I think that's what really matters more than anything. But apparently, the virtual world is where a lot of money has been going. But the fact is we have all this inflationary pressures, and that's where all this excess money is going. But I think, the beneficiaries are going to be in the real world at some point will be gold and silver. And I know you want to mention something, Stelius, but I just want to say that it is acting like crap. I still think you probably want to be buyers on dips, but here's gold. I think anything below 1,700, you want to be a buyer, but that doesn't mean that we can't revisit that area. Anyway, go ahead.
I was just going to say that we're seeing generations of gamblers being made. We've said this before.
My God, yes.
People have a very short span of attention. They want results fast. Cryptos are the best thing that could ever happen, right?
My 14-year-old son day trades at school. He's up he's up 15% right now. In like a stock that he's been long for like the last few days. It's some chip stock that he found that does technology chip stock for like Tesla or EVs and stuff, and he's like long, and he's but he scalps around. He's like, this is what they do.
He's going to tell you, Dad, I don't need to go to college. I'm just going to trade.
Yeah, he knows that that's not happening. But anyway, notice that gold's trading below the 200-day moving average, and we cannot get above. We can't get above 1830s, but we can't get even above this wedge. We actually broke lower, but we can't even get above 1810. The picture for gold changes dramatically on a move above 1830. Everybody should know that, but even right now is 1825, this would change the picture of gold dramatically. And I will gladly shut the hell up about gold underperforming if we ever broke that. But that's a big ask for an asset that everybody is long right now. And I do a lot of interviews now with the Trader Summit site. If you guys haven't visited here, I mean, I do, predominantly all the video interviews, and I spend 20-30 minutes with people, and they talk about their ideas and what they're trading. And I'll tell you, and just, like Dale does. And I bet, Dale, you probably run into the same thing here, as you bring so many people onto the face interviews. I haven't met a gold bear yet. I have not. Somebody come out of the woodwork and tell me they're a gold bear, and let's put it on video and get you an interview, because I haven't met one. And everybody says the exact same thing. Inflation, beneficiary is going to be gold, silver, any precious metal. Even people will tell you Bitcoin or whatever else, but gold has really acted like crap. And unless we start breaking above this, 1830, 1820 level, I'm just not convinced. But that would shut me up, right? And I think it would shut up any naysayers, which, whoever they are, I'd like to see them. So anyway, but I would like to be a buyer of dips on gold. And I think that, but we could pretty easily see these levels, especially if the dollar started to move. So hopefully you guys got a good view of where the dollar's at, where gold's at, where the S&P is at. And, just keep in mind, we're still really bullish here, especially with NASDAQ, at, continuing to climb higher. We broke out of a bullish wedge. You can see the little dotted lines right there. We broke out of a bullish wedge. The Dow is higher, and even the Russell 2000 is challenging all-time highs.
Yeah.
And we're challenging, 2021 highs. I mean, the mid caps really start to move. And Dave Keller had a good look at this. Dave Keller, I did an interview with him yesterday about the range expansion in the Russell 2000 if things get moving. I mean, the IWM could, be a 10-12% gain if it finally breaks out, but that's a big if too. So
242.
Ryan, 242. What?
Yeah, that is. I've seen targets at 242.
Well, I just do a simple range extension. Look, 2021 range, right? Yeah, I mean that would take us to 260. So I mean that's just that again, a simple 2021 range extension. That's it. You break out of one resistance, and that's just about as basic as it gets. But Ryan, Stelio, Steve, any last comments before Adam Button comes on? I know we got Adam Button from Forex Live, and I'm always a fan of listening to Adam and what he has to say. So any final thoughts here?
Just keep your eye out. I'll be getting the NFP competition up and running today. So
yes,
keep your eyes out for that, because obviously we've got that Friday as well. Have your guesses? Win a free month at ForexAnalytix.
Oh, you know what? This is absolutely horse crap about this free month of ForexAnalytix. The reason why I say that is we keep giving it to current members. I want to give it to somebody that is not part of the ForexAnalytix community. No, but I'm just kidding. It's open to everybody. So even at our current members, we had a couple current members over the last couple months that have actually got it and won it, and they, we just extend their membership by a free month, and which is pretty cool. But
so let's do that then. Let's say right, we'll give one to someone who's not a member. We one to a member if they win it, and one to someone who's not a member.
Yes. Okay, I'm in. All right.
Job
all right,
done.
guys. Well, Stelio, Steve, Dale,
Blake.
That's right. That's my name. All right. See you guys. Have
Thanks,
good luck
guys.
today at the for FOMC.
Yeah, good hunting, guys. Thank you.
Thanks.
Welcome.
And Adam, welcome.
Yeah, Adam, welcome back, buddy. How are you?
He's muted.
You're muted, buddy. How about now? You good?
He's unmuted on the system here, but I think his input source. There you go.
There we go. Good now.
Adam, yeah. How are you?
Doing good. Doing good. Big day.
Yeah. You sound better, like you're over that cold. I was thinking about you. I was thinking about you yesterday when gold started to sell off. And, we were talking last week about it. And maybe we could go over that again, that seasonally, it's one of the better trades. Why don't you tell the
I can't. I mean,
we
look at the seasonals every month, and I feel like over the last, we've probably been talking 7 or 8 years now, Dale. Over that time, you see so much more talk about seasonals in markets, and I think instinctively when people see seasonals, they think, well, this shouldn't work. It's nonsense. I mean, if it's out there, everybody would know it. It would price in, but it works, and you see it time and time again. And I think
when did you start looking at them?
It was a lot of bond guys started talking about it.
Because I learned from Jake Bernstein made it popular.
I really respect it. It was Ian Lingen, and who was the guy he was with it? I forget the names. Or now look at that. They're not even giving them credit, and they were, these were really smart guys, right? And they said, listen, you got to keep an eye on the seasonals, and so we started to apply it to FX, and you would see, over time, it would work. And the single best seasonal trade that I know is gold, or that I've traded anyway, is gold from December through January. And into February. You kind of put some shoulders on each of that. And then you can see some of the strength in November, because I think people are front running it, just building up over the last few years. And the way I'd like to go at that right now, anyway, given the setup in the market, is wait for some sort of pullback in gold here in November, and hop on it. Now, how much that is really the art of trading, or whatever else is going on. Maybe the Fed is dovish today, and we missed the boat a little bit. But that, I think, is one of the big things that I'm looking for in November.
Okay, well, we're starting to test some technical levels here, Adam. Is your view that, and I know a lot of people turn bearish under 1720, that's our big level. Of course, 1680 is very huge. I'm thinking that we hold above this low would be the most constructive, maybe 740-ish or 1740-ish. What are your expectations from the Fed? Perhaps, everyone's saying that they might be hawkish, but, Blake was talking about how they telegraph. And last night, I saw Biden bringing up nominations of Fed officials, at a climate change conference. Signal. I mean, he's not like President Trump that is going to threaten to fire Powell. But, why bring up Fed members? Was that a cryptic way of saying, take it easy on the taper? Biden might be worried about it.
I'm not sure on the context as well. Maybe it was just asked and answered. But, for me, this Fed, it's so well laid out. I mean, it's like the best laid plans of mice and men, right? Robbie Burns. They have teed this up for so long. And it's because, one of the things we often talk about is generals always fight the last war. And the war they've been fighting is the taper tantrum, right? They've been scared of those two words now for 8 months. And, I don't think the market was ever going to get worked out about the taper, because the market had seen the taper tantrum before. So everybody had seen it. But they telegraphed in everything all the way along to get to this point today, where they could say it's going to be $15 billion, and it's going to run off middle of the next year. And this is, we've told you about this, and now we're just going to execute. This should be so simple. But here we are on the day of, the market's pricing in more than that in terms of rate hikes in June before they should even be done. And the Fed has to say, oh no, should we up this to 20 billion? Should we put in some extra flexibility that we really don't want to have? I think they just come out and stick to the plan today. The market isn't screaming that they have to do something today, even if maybe they should in a few months. I believe the doves still think that inflation is transitory, and the jury's still out. So I think it ends up being something very simple today in terms of, yes, it's 15 billion. Yes, we start to taper this month. And it really should be that vanilla. The market reaction, on the other hand, we've seen Aussie, Euro, Canadian dollar in the past week on central bank decisions make some pretty wild moves that were largely counterintuitive. So, strap in.
Yeah. So, it's interesting you bring up what's happening there. I know that you're a long-term oil bull, and you and I talked, and I said, potential correction. Is this enough to get you interested here? And what do you think OPEC's going to do? What kind of impact it'll have on the market? Are they going to be generous, and we get some type of sell-off to 76 here, Adam?
I'm following it closely. There's no signs. There would be signs, I think, by now, or at least today, that we're going to see something tomorrow in terms of a surprise. Again, OPEC really laid this out so nicely. If they start to crack now, there are some members, UAE in particular, that would just like to pump more right now. So if you start dabbling, then then the sort of knives come out in every direction, and you've got to fight a whole new war. They laid this out. Ultimately, they want high prices. I don't think they're too worried about the U.S. because they can say to the U.S., pump your own oil. You're 2 million barrels a day below where you were. So don't look to us.
Yeah,
Not that
because
they,
they
not
put
that they
us,
actually.
because they flooded the market and put the frackers out of business.
Well, I would
That was
say
a
that
great
Wall
market.
Street.
Wasn't that a great marketing move?
I would say that Wall Street flooded money into the frackers who were promising $20 a barrel profitability in oil. And then it,
Okay.
10 years later, they're still not making money at $65 a barrel. And Wall Street says, listen, time's up. There's no more cheap money coming your way. You got to make money. And the stock market, like ultimately, I
well,
think
we did
oil,
have a negative reading in oil during peak production. So I mean, oil was under pressure, and it wasn't just from fracking.
well, I mean, America added pretty much all the marginal barrels in the last 10 years into
Okay.
the oil markets. So
right.
it's tough to blame OPEC for that. I mean, you go from 7 million to 13 million barrels a day. That's American oil, not OPEC. But okay, here's the long-term trade in oil. I think oil continues to go up until oil stocks go up dramatically. Because right now you had Diamondback Energy, that was pretty much the biggest fracker, one of them anyway, yesterday come out and say, listen, we're not drilling more. We'll drill our inventory and we'll keep production flat. But our stock's trading at, 8 times, say, EV to EBITDA. And it's the same pretty much world over. There's just extraordinarily depressed multiples in oil because they're priced as if oil's going away. So they're all saying, listen, we're not drilling more. And this is almost universal. And this, I think what we talked about last month, waiting for earnings and the message that they're not drilling more. Now, OPEC has 2 million barrels per day of spare capacity, but that's going to be eaten up by the market, by the reopening. So at that point, unless oil company shares have doubled and you start to stretch those multiples and they have to find new paths towards profitability, they're not going to drill and there will be no new oil. I mean, maybe the explorers start to come on in time, but I think that's really, so oil will continue to go up. In terms of the tactical trade where you're at, we had 10 weeks in a row, more or less, 9 or 10 weeks in a row of straight up for oil. And you would expect any sort of spec to dial it back along the way. And we saw that, I think, last week. Prices came down.
Yeah.
You get these $1, $2, $3 drops, and they were just bid right back up. To me, that looks like real money because it's just too small of a dip for a spec to be buying unless you're extremely bullish.
To your point, huge underperformance. This is an ETF of oil, OIH, and WTI took out the commensurate high here, and OIH did not. So they've really been lagging in performance. I mean, based on price, not bad, almost a triple from where we were late last year. So
yeah, I mean, if
they
you
have
look at
been
the
getting
drill
a
count,
little love.
they're never going to drill like they did. I mean, there's more efficiency, and now they have cost pressures, right? I think it's hurting the servicers because there's cost pressures everywhere, and they built a lot of extra capacity. Although some of that, you'd argue is rusting, but that might be the case everywhere. So I'm extremely bullish still on oil after this run. I mean, we had Bank of America talking about, I think, 120 Brent by the middle of next year. Natty might be a bit different story. Speaking of seasonals, we're at the peaks of seasonals for natural gas right around now. So I'd be a little bit more wary about that.
Yeah, look at that.
Not
move.
To say it's a weather trade from here. I mean, if it's cold,
Yeah.
it goes up. If it's not, it goes down. So
what's it like there? What's it like where you are at today, Adam? What's the temperature? You have any snow?
Nice. It's nice. I know there's that cold working its way through kind of Chicago area and then down.
That's why I left.
Oh yeah. How's weather where you are?
It'll be about 75 today.
Beautiful every day.
There might be a cloud or two in the sky.
It's actually pretty nice up
not
there
bad.
today.
Not bad. As long as there's no, earthquakes, we're great here in California. Or brownouts or wildfires, it's nirvana. So I want to ask you about the dollar, Adam. So I believe the dollar has so much impact on everything. It's kind of like the fulcrum of everything, and people keep looking for the dollar to peak. I still think there are a lot of dollar bears out there. To me, this 93.5 has been a real important area. We had this false breakdown last week under 3.5 and came back Friday back above it. Looks like the path of least resistance is higher here.
Yeah, I mean, this is what I'm really thinking about a lot right now is that the bond market response that we saw last week. It's like it was like a sea change, really, and not necessarily intense, but in Australia at the front end,
Okay.
you know, even German bonds, Canada, really the front end blew up in terms of yield. UK
Yields went higher everywhere there.
Yeah, and they were these spike moves, and then you
Okay.
saw treasuries getting whipped around. But
Yeah,
then
the treasuries was that why there was a rally in the treasury market because of what was happening globally? Because
Well, I think there were a lot
yields
of
came down.
relative value trades out there, and there were talk. I think I mentioned it when I last spoke with you about firms blowing up, and I think I've heard more evidence of that. You know, maybe it's a little bit exaggerated because I don't think any of these firms were big enough, or any of these trades were big enough to really roil it. But when it gets out there, I think a lot of people were in the same trades, and it just went too far too fast, and I think it's got a lot of people off balance right now. But it might still, that just might be a you know, that speaking of earthquakes, might be like the tremor before the aftershock. Well, however it works with earthquakes, big one.
Well, you think that's a pin that eventually pops the whole bubble, Adam? It's is a huge bear market in the bonds. All bonds.
And you know, maybe it is today on the Fed. Maybe I have underestimated the taper tantrum possibility. And I think at some point, though, you just held this down so long, like a balloon underwater, and that's what we saw in Canada and Australia and the UK. The way that popped was disorderly, and that's not what you want to see at this point. And it's, if this inflation tailwind ramps and ramps and ramps, then that pressure just sort of grows. It's like you're holding it underwater and the balloon is getting bigger, that the balloon is inflating underwater, and eventually the Fed is sort of trying to raise it up slowly, but
talking about balloons, you know, every dip in the S&Ps has been like a beach ball underwater. Pretty stretched here, Adam. You know, someone asked me, and we were talking about it here in Phase about, you know, Blake was listening to podcasts about crypto and NFTs and everything, and someone asked me, Dale, you know, do you think this is comparable to the early 2000.com? They brought up pets.com. And I said, yeah, comparable to, say, that was a 2.0 on the Richter scale. And what we have going on now is like a 10. You know, I've been around a while, you know, and I've never seen this type of rampant speculation and bull markets and so many things. There are things I don't even know what they are. NFT, I thought that was a typo for the NFP was going to be out. So, you know, don't you feel the same way? I mean, it's all been fed by cheap money, and if things are going to change even for a while, that there could be some give back of inflated asset prices.
Yeah, I mean, and if you think about it in the big picture, it makes sense, right? Like the early 2000s, late 90s were the entrance of retail as a force in markets, right? Plus, you also had, I mean, the internet, which is a massive technological change. Now, I mean, the pace of technological change is arguably just as high, and the companies are making money. And two, you have an explosion in retail access. Not, you know, in the late 90s, it was sort of one segment of Generation X that was getting in, and you know, here and there. And I feel now it's everybody, and it's
Blake's son trades at school.
It's the dumbest money possible. Not
Blake's son, but because he's up 15%. But the kids are trading at school.
Yeah, I was saying yesterday, the correlation of meme coin ownership and face tattoos is 1-to-1, and they're making money. But
hey guys, and good morning, Adam. How are you?
I'm doing great.
You know, Dale had mentioned my son, and I'm sitting here. I was just, you know, tweeting a couple things, writing some things, and you know, you were talking about the markets and just it's the everything rally. And it's funny when my 14-year-old son, my youngest one, he looks at me, he's like, Dad, just buy stocks. Everything's going up. It's scary, right? When this is a 14-year-old kid.
Adam's kids are too young to tell him what to do in the market.
And I, there's a kid around the street from me. He had $400. It was a trade. I mean, if anybody made 250 grand in 4 hours on a $400 trade, like just in this insane. It was when oil was going negative around that time, so the volatility was insane. But for the example, for all his friends, he was 19 or 18 at the time. You see these people getting rich, and then you see other people going to work for, whatever it is, $15
$10
an hour.
Yeah.
And you just look like a sucker, right?
Yeah,
And you wonder if that's the message coming out of all this. I mean, obviously it ends in tears at some point, but
it does. And I think that's a great point. I'll let you guys continue on, but that's the point. Like I'm a parent trying to teach my 14-year-old kid, like, hey, let's, you got to pick up some poop because, I'm going to pay you $5 to pick up the poop around the yard. And he's like, yeah, no, thank you.
Yeah.
So anyway, I'm going to leave it with that. You guys continue on. Hello, Adam, and good to have you, man. All right.
All right, Blake. So anyway, how challenging to be a parent in this type of environment, to
bring it back to stocks. I read something today. There's been 7 years where the S&P 500 has been up 20% year to date at the start of November. It's rallied through year end every single time. After that, I think the average is 6% to go. That looks like a nice consolidation to me. I mean, it's a small dip, but there was at least something there. And you just take it through year end. The Fed probably teased it up today. It says 15 billion. Leave me alone. We'll talk to you in June when it's done. And then why wouldn't you buy stocks on that, right?
I'm just a little swing trade. I'm thinking 47.40-ish by year end. And I think
sure. That's totally doable. 47.4, 4,800.
And then 26 by April.
Yeah, I wonder if early January you have some serious capital gains sort of issues around a lot of this that start to see the market. So
when you think, Adam, that everyone knows taxes are going up. I mean, even though they floated a trial balloon that got shot down, this administration wanted to tax unrealized gains. Can you imagine what that would do to the market? Who would ever hold an unrealized gain that could disappear? You get taxed on it, and then it disappears in a few months.
Yeah, well, I mean,
there's going to be some
tax policies beyond me, but
yeah.
I mean, ultimately, it's the Tina trade. There's still no alternative to holding stocks. So if I imagine a world where you could get 6% in bonds. There'd be a lot of people would be happy to take that rather than whatever it is they're getting now.
Yeah.
But for how far are we away from that? I mean, it would crush the market.
All right. So continued melt up. Gold's accommodating you down $11. Give me a little ping when you're going in there, buddy.
Okay.
And always appreciate you being here. Want to wrap it with the loonie? Is that a pretty important area here?
Yeah,
it looks like it's carving out a higher low.
I believe there's a beautiful head and shoulders there targeting 120. But if you look at the last week, we had a Bank of Canada to turn it around. Bank of Canada came up pretty hawkish. Oil, sitting right at the highs, made new highs I think last week. Commodities doing pretty well everywhere. Risk trade doing very well, and it just couldn't get going. And some of that might be that the bonds skew, right? That might be clouding the picture. It was end of month as well. But I worry when something can rally on good news like that it needs to take a little bit of a break. So, it has so far this week.
I'd love to buy it at 22, 78.6 back. Right there.
I think I'd like to sell it at 20, closer to 25.
I think you're going to get that.
For a ride. Yeah. I mean, like I said, if I miss it, I miss it. If it starts to go south, we could ride it down. Same as gold. I mean, if the dip doesn't come, I'll catch it next year. There's always another trade. That's what I often say, and I think that's my philosophy in trading is that I mean, the worst thing you can do is kind of FOMO a trade or
impulse. Yeah.
You just revenge trade it. I mean, all those things come from sometimes you watch a trade for a year, right, Dale, and then miss it. I mean, we're watching the Russell right now. We mentioned that last time. Looked like it was perking up above the top, but then you see, Avis is now the biggest component it kind of memed out, and AMC going as well. Is this the kind of fundamental breakout in value we're looking for?
Yeah, the trash is the last to dash. Is
All that's
something I
scary.
was taught.
It's scary. It really is. But it's like you got to dance while the music's playing.
Yeah, and
I don't know which. When
I'm
we all
glad
look back at this, when it does go south, we'll say, "Oh, that it was Hertz rally. That was the it was the clue that it would go, or whatever, Shiba Inu or Dogecoin or something." But there's one every week, so it's bound to be one of them eventually.
Yeah. Anyway, a broken clock is right twice a day. Are you talking about my analysis?
Get out of here.
All right. From one journalist to another, Adam. Anything new at Forex Live? I see you guys are doing education.
We're doing some of that. We'll have more of that. We got a little section on that. I mean, for new traders who are here, everything's free there. Check it out. We've got a great community. It's very supportive. We'll bring you along on the fundamental side. Days like today, though, are what we do. I mean, it's a Fed decision. We're analyzing things in real time, setting things up in real time. I mean, we're not waiting till 2 days later to tell you what happened. It's what's happening now, what we think is happening next, why it's happening, what to look out for. The time between the announcement and the press conference. I mean, there's no one doing that kind of strategy. So check us out and see if we can steer you along or offer a little bit of tidbit that gets you over the top.
Okay, one of the best news advisor, analysts, traders I know, Adam Button. Thank you so much, my trading warrior brother, for I feel lucky I got to talk to you a couple weeks in a row. All right. Good hunting today, Adam.
Yeah, big day.
And good luck to you and everyone who reads your stuff and follows your stuff. I hope pips rain down on you guys, that you need an umbrella today.
Beautiful. Thanks so much for having me, Blake and Dale, and everybody here. And
all right.
Should be live.
All right. See you, Adam.
Thanks for joining us, Adam.
So that's a wrap, everyone. And Adam Button at FX_Button and at Forex Live. And you could join the team in 18 minutes for the morning edge for more prep on what to do with the Fed. We're getting some alerts here on cable. Cable's really popping here. So good luck today, everyone. I think that everyone has some ideas, and we'll see you tomorrow. Don't just count your pips, count your blessings. And I know my hair looks like we're still in a pandemic. So see if I could do something about that this weekend. Maybe I'll make a few pips and I could get a haircut. What do you guys think? So good luck. And today be a great day. Hey, today be a great day to sign up for ForexAnalytix and be in the chat room and, see what they really do. Because really, face is just the tip of the iceberg. You're very welcome, everyone. Good hunting. I'm pumped. I'm ready. I'll see you guys tomorrow.
See you, Coach.
All right. Thanks a lot, Blake. Good luck
Thank
today.
you, sir.
Adios.